Hello and welcome to another exciting section in QuickBooks. Now, on this section, we are going to be analyzing vendors. Who are vendors to a business? What they do, how to enter the transaction in QuickBooks. Now, vendors in a business forms an important aspect, a segment in business that is very important to them. Why? These guys are the guys that help you in fixing your selling price. Yes, based on the transaction you do with them, you know the nature of selling price you have to fix in your business. Now, these guys are also known as suppliers of your business. They form an integral part in the cost of sales, your profit and loss in your business, and they are linked to that aspect. Now, as well as your balance sheet, your statement of financial position, they have a section there when it comes to owings. When you begin to owe these guys, they have a place in your balance sheet. Now, it also depends on the nature of the owings, if it's a long-term or a short-term owings, right? Now, these vendors, we usually they usually what we call bill. Normally, when we were analyzing the sales order for customers, we issue them what they call a sales order and an estimate, one of which we can use to collect, to bargain with these customers to collect money from them. Now, when we use a sales order, we're telling them this is our quotation. We need you to come and buy this item from us, right? When we agree and bargain at the end of the day, we now create an invoice of which they are liable to pay, and that invoice is what's going to be affected by our receivables account. So it has a direct relationship with receivables. Now, when it comes to vendors, the movement is like this: we enter bills and we pay bills. Now, these vendors issues a bills to us, of which we enter on our QuickBooks. Now, these bills, at the point of which we enter these bills, it definitely forms a payable items to our book of account. Payable means creditors. Previously, it was called creditors. Currently, now it's called trade payables. So when we enter these bills on our QuickBooks, our trade payables accounts automatically increase pending when we pay these bills. As soon as we pay these bills, it reduces the trade payables items in our account. Now, on this section of this home page in QuickBooks, you can see where vendors are itemized: enter bills, pay bills, manage sales tax. Now, for the vendors, we need to have a structure of vendors we transact business with. Normally, a business usually have a particular customers or supplier that supply them a particular goods and services frequently, right? They have a customer that they transact most times with, right? And at some point again, they might also change vendors and transact with new vendors. Now, it depends on the nature of the business. For this company we are analyzing, remember, VDEC Manufacturing Company are into the manufacturing of blocks, right? They're into the manufacturing of blocks. So their vendors now will also be in line with their business model. Now, let's check the list of vendors we have for this company. When you click on vendors, you can see we already have 2 vendors. This is tax authority, so that is out of it. So we already have 2 vendors: Dangote Cement and Internal Oil Nigeria. Now, again, these are not actual business transactions. This is an illustration we are using for this class, right? So these are the 2 vendors we have: Dangote Cement and Internal Oil. Now, for Dangote Cement, the business is into the construction of block. So those vendors both of the vendors we now have will be vendors that are into that field. Now, Dangote Cement will supply these companies some portion of cement, some bags of cement, and the rest like that. That is one of their major vendors. Now, there are transactions that happened then, but we're going to do a new transaction now and show how it works in QuickBooks. First thing, we've been able to find out the vendors of this business: Dangote and Internal Oil. Now, what now happened was this: we need the supply of some bags of cement to carry on our business activities, our production in the business. Now, this VDEC manufacturing needs some bags of cement to carry on their production. Now, what they do is they approach this company, these vendors, and give them what they want. Now these vendors, we now give them a bill. Normally, this vendor now sees our company or this VDEC manufacturing company as a customer. So to them, they might enter a sales order, issue it to us, and we now create an invoice. Now that invoice stage where they create that invoice and we're liable to pay is when we now bring the invoice to our company and enter the bills on this section. So once you click on enter the bills, we are now entering it into our account, into our books. Automatically we are liable to pay, right? Once we enter our bills. So they've given us the bills, we've approached them and submitted what we need. They've given us the bills. This is what and what, this is how it's going to cost, right? So in this enter bills, this is how it looks like. Now QuickBooks has a way of you uploading, helping you to upload those bills you entered on paperwork. Probably there are some bills you wrote on paper and you want to upload it to QuickBooks. You just come to this side, upload and review bills, right? You want to recalculate the bills you enter, you come to this side, recalculate bills, right? Then you want to pay bills, you come to this side. Now let's just enter the bills and see what happens. Our vendor, remember, who we want to buy cement from is Dangote. So we click on this vendor section and choose Dangote. It has given us what we need, right? So we approach them, let's say last month on 11th, right? This is the address, this is the amount. Now we wanted the supply of some bags of cement and it cost us, they gave us a bill of, like, let's just assume a figure, a bill of 500k, right? You come here to this section and write 500,000. That is how much it costs. 500,000. Now memo. Thanks for, you can just write any narration you want to write on the bill. Any narration. Or you can just write being the supply of 500 bags of cement or 100 bags of cement. Anything you want to write on that aspect, you can write it. So for here, I'll just write being the supply of 30 bags of cement, right? That will be the memo. Then this is the bill we've entered. On this section where you see terms, so 1%, 10 net 30. I will explain this now. Now these vendors, when you approach them, although we're not going to use it, we're not going to use it on this, but I'll just explain what it means because this is applicable to some businesses. When you approach them, 1%, 10 net 30, probably you are to pay an agreement with them. Out of 30 days, you are to pay in 10 days to give you 1% discount. That's what that means. 1%, 10 net 30. So when you approach them and you agreed on this social date for payment in 30 days, and probably you told them, okay, you can clear it in 10 days. How much percentage are you going to give me discount on my bills? They'll tell you 1%, they'll tell you 2%. Due on receipt, consignment, net 30, 15%, net 30. So for 2% is in 30 days, which is the maximum. You're able to clear in 10 days, you get 2% discount on your bills. Due on receipt, immediately you get the bills you are owing, right? Immediately you get the bills you are owing. Net 15, you are liable to, you are going to be owing in the next, your owing structure has a max period of 15 days. Net 30, net 60, that is how it works on these bills, right? That's how it works on these bills. Now, what we're going to do, we're going to choose due on receipt. So immediately we issue this bill, it is assumed that we are owing, right? Due on receipt. So 500,000 naira. Another thing we need to understand is what account is going to be affected by, in our books, by these bills we are entering. Now, like I said initially, suppliers or vendors have an effect on your cost of sales, account in your income statement, on your cost of sales account in your income statement. So they have an effect in that books, right? And when you owe them, it automatically becomes, it depends on the nature of the owings. If it's a 1 year owing, it automatically falls under current liabilities, right? That figure that's been owned will also be transferred to current liabilities section, right? Now this is it. We have on our cost of sales, this is now the amount we have, 500,000 as owings. So they're going to supply these goods to us. This is the amount we are owing, and it's going to be owed due on receipt. Immediately, our payables account is going to be affected, right? So when you're done with this, you click on save and close. Now let's check something first before we click on this save and close. Let's check our payables account, how much we have there previously, and let's see what will happen, what the effect will be as soon as we click on this save and close. Now when you want to check that, you come to view balances, click on it, account payables, that's where we are interested in, 900,000. Now let's enter this bill and see what we have, what will happen in this account payable, what the effect will be on this account payable. Now this is our bill, these are all the accounts that were affected. You save and close. Okay, yes, save and close. Now let's go back to our account payables. You can see from 900,000 it has increased to 1.4 million. That means the 500,000 added to the 900,000 previously owned to other payables has made our account to increase to 1.4 million naira. So that is how we enter bills for these vendors. Now we are going to the section of paying. Remember, the bills is due on receipt. Immediately we receive it, we become liable on that bill, right? Now let's go ahead and pay. You come to this pay bills section, click on it. Now, due on or before, you have seen most of the debt and the bills we have outstanding. All the bills we have outstanding. You just go straight to the one that concerns this transaction, right? Now, this date, Dangote Cement, 14th September 2025, 500,000. This is not our transaction because our transaction was not entered on the 14th of September 2025. It was entered and it was due on 11th of March 2026. So this is it. You just click on it, right? 500,000. How much are we paying? Are we paying everything, or we're paying instrumentally, or we're paying half, or we're paying? So it depends on how much you're paying. So for this transaction, we want to settle everything. The whole 500,000 naira is going, right? So show all bills, to show all the bills we're owing. Now, vendor information. These are the information of the vendors, right? When we pay him this amount, automatically this account becomes zero. This amount that is owing here, it becomes zero, and this figure here will reduce, right? Now, when are we paying him? Should we pay him that same day we collected the bill, or a day after? Let's assume now we collected the date we collected the bill was 11th of March 2026, and let's assume we paid him that day. So we'll still maintain the same date for payment, right? Method of payment, checks. Okay, then to be printed, do we need to print this? Okay, let's leave it. Now, account, the way you see this account is the account that we have, that we transfer the money to this company, right? The account we have. If you come to this side, you see our bank account on our chart of account. All our bank accounts we have, you can see UBA, we have Zenith, we have this. We have just UBA and Zenith for transfers. So now let's check where we have money more. We have money more in UBA. So let's use UBA to transfer that money, right? So we go back to the bills we entered for that guy. Payables. I think this is where we are. We go back to the bills. This is the company. We're paying 500,000, right? These are everything. this date, that's when we're paying. 3 checks. All right. We're going to use this UBA. That's why we have money and pay this money. That's why we have money more. So we're going to use UBA to pay it. Then the next thing you do, you just click on pay selected bills. So I click on pay selected bills. Automatically we have paid. That noise you heard means the transaction has been successful. Now, you can either choose to pay more bills, to print the checks, or just close it. Done. So if you have more bills to settle, we can choose to pay more, or we just click done. So for now, let's just click done. We can decide to print this. This is our payment receipt for the bills we are owing. Click on done, and that settles it. So come back to your one thing that will be affected now, since you're paying the bills, is your bank account. The company bank account that is transferring the money. That bank account is going to reduce the figure. So initially it was 5.2 million that was there. It's going to reduce to 4.7. Then another account that will be affected is the bills, that's the account payables account. These are the double entry. The account payables account will be affected, and the bank account. So what's the double entry? You credit the bank account since it's reducing the figure, and debit the account payables account since it's going to have a reduced effect in the account payable account. So what that means is that our debt as a business is reducing, and we used the cash we have to pay that debt. So our cash account is also reducing to balance the books. Also, in your balance sheet, it's going to look like that. Your asset account, which is your current asset, your cash account, has reduced by 500,000. Your current liability account, which is your account payable, has also reduced by 500,000. Two sides has been balanced. So that's how this works. So now let's confirm that to see if it works. Account payable is 900,000. It has gone back to 900,000. That means it has reduced in figure. UBA account from 5.2 has reduced to 4.7. So that's how we record vendors transaction on QuickBooks for vendors or businesses. So subsequently, you can decide to do more, try more on your own, try more debtors, more payables in numbers like that. There are ways you can actually do payments to payables in large numbers, and all the transactions will still balance. So QuickBooks helps to streamline all these paperwork, to just automate all the processes and make work easy for you. Thank you so much, and see you in our next video. Bye.